What's up? What's up? Good morning, family. It's Real and Authentic with Antoine Smalls. I'm out here in front of my job. About to go in and get this bag today. Happy Friday. I know some people getting paid today. Don't kill the bag today. Take care of your money. And actually, we're gonna talk investments real quick. So I just listened to a live stream while I was driving to work, and this guy came on, the lead attorney's. Shout out to the lead attorney. He actually helped me start not help me, but he encouraged me on his live stream to start my YouTube channel. So I want to shout out the lead attorney for giving this game and help me basically open up my heart, open up my mind to the possibility that I had something to give the community and the world. So there was a gentleman that came on the show talking about how trading and investing is the same thing. I'm like, it's not. It's absolutely fundamentally incorrect to say that trading and investing is the same. I just disagree. I spent time over the last 2 to 3 years, and I started option trading for a while last year. For most of the year in 2020, while the pandemic, quarantine, I was option trading, and I stopped putting money towards my long-term investment portfolio, and I put strictly everything that I was making towards, or the money that I was basically putting in was all towards option trading. And so quickly you learn that it's day trading and option trading it's just different. Technical analysis, when you're reading charts, you're reading resistance lines and supporting lines, and you're looking at the 5-day, 1 month, 3 month, quarterly, 6 month, semi-annual, annual charts. You're looking at their fundamentals. You're trying to see what the earnings season looks like. You're looking at so many things that doesn't really fundamentally have anything to do with long-term investment strategies, right? Because long-term investment strategies is a totally different ballgame. And when I sat back and I read Warren Buffett's #1 suggested book when it comes to investing is The Intelligent Investor by Benjamin Graham, everyone that wants to learn about investing, you need to read that book. Amazing book, right? And it talks about investment strategies from a long-term perspective. Because when we're talking about long-term, we're talking about 20, 30 years, right? Most people that's under the age of 40 has at least 30 years, God willing, on this earth, right? So if you're looking at long-term investment strategies, dividend portfolios, how to do compound interest, how does a company like Amazon, for example, that's currently at $3,500 a share, where will they be in 10 years? Are they going to be at 5,000? Or will be at 6,000? Who knows? A company like Apple that was just at $525 before they did the stock split. Now they're back down to 140. If you buy into Apple today and you waited 20 years, I can almost guarantee you that you will get 2, 3, 4, 5, 6 times your profit, right? Because you're looking at long term. You're looking at the forecast of a company. We're looking at the world and how tech is moving. And we're looking at the world and how electric vehicle is moving. We're looking at how now AI is so big, right? We're looking at chips. We're looking at all of these things that over the next 10 to 20 years, how is the world going to change? Looking ahead, right? So long-term investment strategies is a totally different thing than trading. It's just a totally fundamental, totally different mindset. The things that you got to think about is totally different. I don't really care necessarily. We care, right? Because we don't want an overinflated stock price. But if I'm looking at a stock like Amazon, Apple, for example, at 140, I'm buying that at 140, right? Because we understand the stock market goes up 5 to 10% on average every year, regardless of what happens, right? You might have down years, but that's very seldom that you have a down year, right? You might have a down few months. You might have a down quarter. You might have a down month. But usually stocks move up as they come down. You buy, they move back up. Ultimately, it's cyclical and it continues to progress the same way the market progresses, right? So if I'm looking at an Apple, for example, at 140, right, in 2021, I'm looking at their forecast and I'm saying that I trust in this company, I trust in this business, I trust in the ownership, the CEO, the business model. You know, what's their, if they pay out any dividends, I'm looking at that. You know what I'm saying? I'm looking at how many shares I can buy so that I can hold for a 10 to 20 to 30 year span. You know, I'm trusting in the fundamentals of the company. I'm looking at their debt. I'm looking at their PE. I'm looking at so many things from a fundamental standpoint that has nothing to do with options. That has nothing to do with trading. So I just wanted to come on this morning. I know that, you know, it's early, but I'm always in the game when it comes to money, when it's in the game when it comes to investing. My mind's always thinking about it. I'm always putting more money towards in my investment portfolio. I'm getting into crypto. I'm starting to get into that. I'm only putting about 25% in my portfolio into crypto. I can have a whole nother video about crypto. But hey, it's Friday. Celebrate. Get up, get out. Don't kill your bag. You know what I'm saying? Always pay yourself first. Pay yourself first. I'm not saying go buy a $200, $400, you know, pair of sneakers or something. I'm talking about put money to the side for yourself. Invest in yourself. You know what I mean? Think about your future. Every decision you make today affects you 3 to 5 years from now. Be better today than you were yesterday. Be better tomorrow than you were today. Love you guys, man. One love. Peace.